What is up, traders? Welcome back to our channel, and I hope everyone's excited for the final part of our free futures day trading course here on YouTube. And to do that, what we're going to be doing is actually breaking down what it truly takes to be profitable, the path to growth that a lot of traders don't necessarily understand. They have the strategy that we've broken down in the past 7 sessions here, the execution, they understand all that. But there's one thing that's stopping them, and that's exactly what we're going to be talking about today. If you've ever revenge traded, moved a stop, right, obsessed over payouts, blown accounts, this video right here is your reset, so let's dive right into that. We want to understand how to actually scale up today, how to build confidence, and how to grow as traders, creating a path of consistency for the foreseeable future. So, with that being said, let's dive into this intro. I hope you guys enjoy this video. Hit that like button, hit that subscribe button, and we'll be back on the screens right after this. So last time we nailed down execution, right? Throughout the past 7 videos, we've broken down auction market theory, order flow, setups, the system, execution, pretty much everything that you need. We're going to be launching the full version of this course late October 2025. That's when we're going to start the live recording. So if you want to be a part of that, check out community.tradeproacademy.com. But today what we're going to be doing is wrapping things up in this series. We're going to be breaking down how you can simplify everything in trading. It doesn't necessarily have to be complicated. We're going to break down the real path to growth and what it actually means to be successful in an extended period of time, in a longer period of time, and actually gain consistent profitability in trading. We're going to be breaking down the effectiveness of journaling, right? Psychology that rewires bad habits, and also paths to funding that you can take. So if you're excited about this, right, just stick around because there's a lot to review, especially the journal aspect. The number one thing that someone had told me when I was first starting off my journey is that the best teacher in the market realistically is the market and what you actually do. So having a very effective journaling process, which is exactly what I'll be breaking down throughout the majority of this, is going to be extremely effective in your growth as a trader. Now, trading is inherently difficult. It's not a linear path. Everyone thinks that your P&L, once you start at point 0, right, in terms of your time as a trader, goes something like this eventually, right? Some people might think it might even go like this. It's never going to be linear, right? This isn't some kind of career path where you invest at the beginning and then you reap the rewards at the end without an insatiable amount of hard work, discipline, and really just digging yourself out of the worst possible situations. Humans are inherently bad traders, right? This is something that you should understand. Humans generally avoid risk, they chase safety, they overreact, right? And that's fine. Your job isn't to be fearless. You're not going face to face with a lion every day, right? In a sense, you might be, but it's to build a system that keeps you effective anyway, right? Growth is lumpy, plateaus, dips, then leaps, right? You want to expect all these scenarios. Generally speaking, right, even a profitable trading path is most likely going to look something like this throughout your journey, right? It's going to be a decent bit of drawdown. You're going to start hitting break even at some point, and then you might make decent leaps, but it's not going to come without drawdowns. It's not going to come without periods of drawdown, right? Generally, you can start smoothing out your equity curve. The more you learn, the more you stay disciplined, and the more you actually trade when your edge is there and pull back when your edge is not there. So when we talk about trading, I think a lot of people attach future expectations and past expectations overall, right? They look at what they've done in the past, they see how much money they spend, all this investment, and they're kind of trying to make it back, which is going to hinder and completely destroy your ability to do anything in the future with trading. And then there's the other side of the spectrum, where people live in fantasy land thinking about the potential profits, their lives that are going to change in 5, 10 years, 1 year, 2 years, the potential of payouts, whatever, and they start chasing that P&L, right? The only thing that matters is present day, and the literal only thing that matters is the current trade that you're looking at. As crazy as that sounds, there are going to be hundreds of trades that you take throughout your lifetime. There's going to be hundreds in the past and hundreds in the future, but none of those necessarily matter in any given moment. In any given moment, the only trade that matters is the one that you're taking right now, which I think that a lot of people live in the past or the future, and you only miss the actual now. As cliche as that sounds, right? Trades only happen in the present, so the only thing that you have is the now. So discipline, right? Discipline is something that we talk about a lot. I talk about a lot. Traders talk about a lot. What is discipline? How is discipline created, right? Is it something that is forced? Is there some kind of magical ritual that you can start doing and then all of a sudden you're disciplined? Not necessarily. It's something that is built out. People bring discipline from prior career paths, from prior things in life into trading. Other people have to learn it the hard way by hitting their heads off the wall several times over and over again. Now, this is a breakdown of my journal. What I use is Notion. And throughout this, what we're going to be doing is going through different parts of this journal to get a better understanding of what's going on and how to do this effectively so that we can create something that is repeatable, something that actually helps you learn. So what I have in this journal to begin with, right before we jump into this discipline, we go through the trade plan and system. We talk about A+ setups. I have these at the top of my journal so I can review them pretty much daily, realistically. So throughout this trading journal right now, the only thing I have here is October. Then I put the other months throughout the year in a different document, whatever. And then we have trading psychology and discipline, which I add pieces and bits of information into it as I go about. Because every day you're sitting down there and it's a battle. Not every day is going to be the same thing. So you learn from each and every day realistically. So for October, what we got going on, the first week of October 1 to 3, right? We started on a Wednesday. And this is the start of every week. So I just copy and paste this for every week. And then we have other things here like a profit loss calendar. And then we go into the journal. So first things first, right? Discipline. Discipline isn't necessarily motivation, right? It's a stack of rules that protects you from your worst day. It protects you from your worst self. And it helps you stop and break cycles, right? The thing with bad habits and the thing with tilt, right? Over trading, whatever bad habit you name, it's a created loop that you've pretty much done to yourself, right? And to break any kind of habit, overall, what we need to do is actually put a pause in the loop so that that cycle is actually broken up into pieces and you can get an external perspective, because what people do is they enter into this kind of zombie mode. They go into autopilot when something happens, right? Something triggers, and they go into autopilot, and all the reactions after that are being done subconsciously. By the time you wake up, you're like, holy crap, what the hell did I just do? So our goal here is breaking down the journal and starting off with that, breaking down discipline. This is my discipline stack. So this is how I keep honest and here and how I keep on point with what it is that I'm doing, because I want to think of every step, right, more robotically. And if there's something that's amiss, we break the loop and then we restart. So for example, right, the morning filter, it doesn't take very long, but this is pretty much the start of the development of the trade plan. What I'm trying to do over here in this portion from the discipline stack is understand what the bias is. We'll go with trend, right? We talked about that in early videos throughout this. We'll look at the trend, news, levels, right? Stuff like that. We want to understand where the trend continues, where it's invalidated. What are the setups that are allowed today? So the goal here is when I have a plan, I am looking at a few A+ setups that I'm really trying to position myself into to see if I can really actually only trade those. Then obviously markets open, things start to move around, and the pre-market checklist. So every time before I get into a trade, it's very pivotal to understand, is this an A+ setup, or is this actually a trade that I'm doing out of boredom because it just looks good, right? What are the criteria that make this an A+ setup? This realistically should only take a few seconds because you don't have that much time to make decisions, right? You preemptively want to create these things and decide so that you, when it comes to be, when that trade sets up, then you can pull the trigger. You want to predetermine what the entries, stops, and targets look like, right? You want to size to plan, and you want to understand what your emotional state is going into this trade. Is this trade coming from a place of emotion where you're avenging a prior loss? Is it neutral? Is it excitable? Is it fearful? Whatever the case is, the idea is to get to neutral, right? And then we can take the trade. When I'm in the trade, rule number one, never move those stops. The only reason for me to move stops is as I'm deep into profit and I can start pulling towards break even. For me, again, this is a topic of much controversy, I think, but partials, right? I'll take partials based on plan and then let the rest run. If I'm distracted or tilted or I can feel those emotions coming, I have to be capable enough to just hit the flatten button and walk away. The daily shutdown, right? If I've hit my daily stop, I gotta walk away. If I'm feeling any kind of mental fatigue, even after one winner, two winners, three winners, two losses, whatever the case is, I need to stop. At least take a break and see what's going on and then maybe continue, but usually stop. And then we journal and finish. So I want to make sure that this is all a part of something that I do on a day-to-day basis, right? Here, the beginning of it all, right? Discipline, execution, patience is key. Only take trades that make the most sense, right? Qualified A+ trades. Then we break it down a little more in the discipline stack. Take breaks between each trade, right? Force yourself to sit back no matter how good the trade is. Me getting into one trade and out and then into another one right away doesn't make any sense. It's often perceived as just wanting to be in trades, greed or vengeance, right? You usually, when you're trading back to back to back in different trades, you're either trying to make a profit back or you're thinking about the massive potential of the P&L there. So what I'm looking at, right, for instance, this is a very good example of that. Now, if we zoom in and expand on this, this is a trade that we took on Wednesday, right, from October 1st. Now, this trade, it sets up the plan because we'll review the plan, but this is the general balance like this, and we move inside the balance. This is the first test of the region. My idea is to short. My other idea is also that there is the potential for a long in this area, in this same spot where I'm covering the short. Notice I'm not going short and then I'm covering and then I'm turning to the flip side, even though there's a huge amount of profit to be made there, just because, right, the difference in that time isn't enough for me to make a sound decision to say, okay, is this all the information that I need? I'm mentally exhausted from the first trade. If I'm jumping into another trade right after that just to catch the rebound, that's all fantastic when we look at it like in hindsight, but in reality, in that moment, right, it's a very, very different play. Catching every side of the move isn't something that's done all the time, right? It's rarely done, in my opinion. So when we dive more and more into this trade journal, right, what we're trying to do is develop this massive, massive barrier between us and our bad habits. All of these things, all of these steps, as crazy and as overwhelming as it might be because there's so many things here, it's drastically and vastly important to your success because this is the main thing that teaches you about you as a trader, how you react to the markets, what your major drawdowns and downfalls are, and how we can prevent those bad habits from seeping in. So bad habits, they form silently. You don't even notice them until you wake up from zombie mode and you're like, oh my God, I just tilted another account. A journal exposes them incredibly fast because this is a part where everyone really shies away from, just in life in general. You don't want to look at your negative attributes naturally, right? You don't want to see them in that light because you know that they're negative attributes. It's the same with journaling. When you plop down your trades in front of you on the screen and you see what you've done, sometimes you're like, wow, that in hindsight didn't really make too much sense. These weren't really very good trades realistically, right? We take a look at this day on Thursday. So, okay, loss here on NASDAQ, loss here on NASDAQ, first two trades. Loss here on SPOOs, loss here on SPOOs, first two trades. First two trades losses, and imagine that was it, right? Let's say I tapped out, and some days are like that. On Monday, I believe it was a loss. I think I took 2 or 3 losses, 1 winner, and I tap out. But imagine you look at that day in and day out for a few days, a few weeks, and it's just losses on the screen. Realistically, you're going to get fed up and you're going to want to do something about that, right? You're not going to just brush the losses under a rug, sweep them under a rug and say, oh, okay, whatever, tomorrow's a new day. And then you just do the same crap over and over again. No. The journal is supposed to expose all of those things that you do poorly and point you to areas where you can actually improve, right? It's going to be your greatest teacher. Now, here on Notion, right, this is my general breakdown, right? I have a stop and wait list. I have a pre-market routine, right? These are all just copy pasted to every single week. The only thing that changes is the little calendar, a weekly calendar over here where we look at The personal account, the prop accounts, the demons faced, right? P&Ls, some demons, impatience, not trading plan, bias, right? That was on Thursday. Came out alive, but very rocky start. So what do we want to include in our journal to make it effective? Now, naturally, we want to break it down day by day. We want to tag the setups, right? So let's say, for instance, I only have one trade on this day. This is an A setup because it was completely to plan, right? We want to understand those setups. We want to break down the thesis for the actual trade itself. Obviously, what we're doing is we're going to break down the trade plan for the day on S&P and NASDAQ because we want to be able to refer to those plans when we're reviewing our trades. Now, I put a video section here. I'll put links for my videos. You want to talk about the entry, the exit, right? Size, any mistakes, the screenshots, the before and afters, and then any notes that you've taken, right? The main thing here is the learning lesson. So the learning lesson out of the trades, the learning lesson out of the losses is predominantly what we're looking at, right? This is Thursday. You can see how many trades there are. There's a lot of them. 1, 2, 3 here, 4, 5, 6, 7, 8, 9, right? 10. So including ETH. So there's a lot. First 4 out of the 10, absolute dog water, right? So those are the ones that I want to emphasize and focus on. So, okay, why did I take the trade? What did it look like? Was it actually a good trade? Because this is the thing. You can have good trades, or I say A trades based on your criteria, them just not work out. So I took a loss on the first trade, but honestly, when I'm reviewing it, when I planned it out, when I thought it out, it was a good trade. It was about 25 points in profit on the NASDAQ. I closed it for a loss because I'm looking for 35 plus minimum, right? The entry wasn't the best, but honestly, it was a fine trade. It was a solid trade. I'd put it in an A category, so it's not that bad. The first trade on the S&P, even though it was a loss, I don't know where it is. The first trade on the S&P, even though it was a loss, right, I'd still consider it an A trade. It was up 6-7 points. I didn't take any profit. And then the 2 losers on S&P and NASDAQ, the second ones, I'd rank those C trades. So we want to understand what's going on there because it's not that all the time that your losers are going to be crap trades. That's not it, right? Your winners realistically can be crap trades sometimes. Your losers can be A+ trades. It just matters about the plan. Your plan is never going to be 100% successful. It's not going to be 80% successful. Your trading setup and your rules, right? They're there to create long-term growth and profitability in trading, which generally could be like 55%, right? So that means even A+ trades are going to be losers. So that's a very, very big thing to understand. You also want to break down the full week, a weekly review. You want to look at how you did on the week itself, right? You want to look at your expectancy. You want to look at your setups, which ones did the best, right? Which ones cost you, right? What were the mistakes that you made? And one thing to improve for the next week. The journal is a mirror. We don't have to necessarily decorate it. We want to use it. So with this journal, we can start moving in a new direction, right? The next direction we want to move into is growth. Talking about psychology, rewiring psychology. Discipline is built like strength training, right? It's built by reps, not by vibes or just one-shotting it. It's based on consistently doing the same thing over and over again and inching small improvements day by day, week by week. So when we're looking at breakdowns, right, we want to understand the implementation of intentions. We have if-then plans. If price tags my stop, then I log and exit immediately and take maybe 3 breaths. I take 5 minutes. I take 10 minutes away. If I feel FOMO, then I read the last 2 FOMO losses before clicking anything. I revert to my journal. I have this journal open on one of my screens in 1/4 of the screen, so it's literally always facing me as I'm trading, in between trades. If there's anything that I notice disciplinary, trade win, trade loss, right, it'll be in the journal, it'll be stacked up. We want to implement rules. It's not just trading rules, it's internal rules to create discipline. So, for example, the 2-minute rule. When tilted, right, or you feel the urge to get into a trade right away after a loss, this is how tilt starts. You want to start some kind of 2-minute timer, 3, 4, 5-minute timer, whatever it takes to cool off until the majority of the urge is suppressed, and you're journaling in there, you're tapping, and breaking down those emotions before you make pivotal mistakes that could blow things out. Like I said before, bad habits are just loops. And they're cycles that we subconsciously continuously get into and roll over and over and over. And we don't even realize. The goal is to break it before we enter that zombie mode and wake up at one point and think, holy shit, I just lost a crap load of money and I didn't even realize what I was doing. You want to create a trigger audit just for this, right? Identify your top 3 triggers. For example, if you miss a setup, right? Some people chase. Social media could be another one. Red P&L could be another one, right? You want to remove or neutralize them. This is the prime objective. What are the things that cause the biggest losses for you to tilt or for you to overtrade, whatever the case is, right? Progress over outcome. Grade the trade, not the result. Like I said before, an A trade, losing or winning trade is still an A trade. A D trade, winning or losing trade is still a D trade. How do you classify them? Are they to plan? Are they to your rules? That's pretty much what it comes down to. You want to be very present, right? Like I said before, your main directive is to look at each individual trade as an individual trade, right? What I mean by that is every single trade is not dependent on any past trades or any future trades. That's what it comes down to. So for instance, if I'm looking at the day that I took a bunch of hits in the face, the first trade, I don't think it was that bad, right? Reviewing it, it wasn't really that great of a setup. I'm launching positions into an area that I have no business launching into, right? And I don't think the second setup is that bad either to a degree. So when I'm looking at these trades, right, what do I learn from this? Are they A trades? Are they crap trades, right? What can I do? So for instance, the first trade, realistically, it was head fakes under a support. So I don't think that this is an A+ trade. I don't think it was a bad trade in essence, but it wasn't the high caliber following my rules trade. The second trade over here, we're bouncing off of this support, trying to hold bid. I think that this is maybe more of a B trade. I can look at it and think, okay, well, we failed into these tops to create new highs. There's a little more bearish price action where we can wait for a few more head fakes before getting long, right? Scenarios like that. So you want to rank them, you want to understand them, and you want to look at every individual trade as is. If I'm looking at them in the moment, I'm not looking at this trade over here, the third trade or the second trade, with the idea that the prior 2 were losses, right? I'm trying to look at it individually. I don't care that this is a loss. I'm trading based on the information that I have at this time. That's what you need to do, right? You don't need to be fearless. You need to be rule first. Now, moving into it, right? When we talk about tilt and drawdowns, realistically, we want to be able to handle these aspects. Tilt specifically, because tilt, there is no drawdown. Tilt is account blown, and we want to evade that at all costs. Now, in terms of drawdowns, everyone must adhere to a daily loss limit, right? If you can't do it, then you need to input it in some kind of software that prevents you from trading, right? Whether it's on Sierra charts, whether it's Apex, or whether it's a prop fund, or on Rhythmic, I should say, they all have those loss guidelines. It takes a while to get back into it to change the loss. So hopefully by that time, you think about what you're doing. So you want to really understand what your daily loss is, because that's when you stop trading. The 3 strike rule, right? So 3 rule breaks in a day, you need to shut down. Win or loss, you have to be just disciplined enough to walk away. Equity curve stop. If your equity curve drops below, right, a certain given average or a certain perspective, you've probably cut your profits a decent bit, right? You wanna cut your risk in half until you're back above that line. So you don't want to have massive swings in your equity curve. You could also look at the green day guardrail, right, after 3+ R on days, right? If you're hitting your take profit 2-fold, 3-fold on any given day based on risk, no new risk after the next trade, protect a good day, right? The other aspect is, okay, you've had a good strong green day, you think that you can keep trading. After your first loss, you have to walk away. None of that, oh my God, I was at XYZ dollars, let me just get back to that. It doesn't matter. That's not treating every trade individually. Most traders don't blow up from bad strategies, realistically. They blow up from one bad day, right? A lot can be destroyed in a single day. People underestimate that drastically, so we have to understand that. Now, Moving into that, right, we talked a bit about props, not really, we talked about it in one singular sentence, but scaling and funding, right? Scaling is earned by your stats, not by your feelings. It's not even necessarily earned by dollar amount growth, right? It's earned by your progress as a trader. How well and consistently can you trade X size, right, over and over again for a given set of weeks, months, whatever the case is. In the first phase, you want to gather a sample size, right? When you're trading, even in demo, as you're learning your strategy, your system, you need to be gathering a sample size. The sample size of at least, right, 100 plus trades, I would say, to have any kind of real idea of what's going on. Now, this is dependent on what kind of trader you are. If you're mainly just like a day trader and you take 1 to 2 positions throughout the day, you try to hold for a few hours, then I think around 100 makes sense. If you're scalping and you're taking 15, 20, 30 trades a day, obviously that number has to increase drastically. Now, you want to gather a sample size. If you have positive expectancy throughout that sample size, that larger sample size, then you can start thinking about scaling at that point, right? When we talk about funding options as well, right, personal accounts, they offer max flexibility, obviously slower capital growth, full drawdown pain is yours, full blowout is yours, right? Prop firms, they have quick buying power. They have strict rules like daily loss caps, new restrictions, payout splits, evaluation pressure, right? And then there's a hybrid. Right? There's a hybrid of trading both personal and prop. I think that is the ideal goal. That's generally what I do, try to trade personal until I've hit my goals and my thought processes, and then we'll flip to prop and slowly scale prop. The thing with prop trading is that you have a lot less capital than you think, right? So that means you have to size down and trade a lot smaller than you think. And with that, that means slower progress unless you're being very, very risk intensive and trying to build it up as fast and as quickly as possible. Instead, take it slow and steady for the first month or two, and then from there you can start increasing size little by little until you start hitting some larger numbers. It's like scaling in your personal account, but I think honestly a lot slower because of the rules and the restrictions that you have in prop. Now, when we break this down and wrap this up, we've gone through a lot throughout this whole free futures course here on YouTube. We've gone through the premise of auction market theory, how to read market movement, order flow, execution, and I've given you a strategy, my strategy and my setups that I go through day in and day out, how to create a trade plan, how to actually execute those strategies. This is one of many ways realistically to trade, and I think it's a very effective way because it's driven based on volume. Now, we're going to be dropping the full futures course starting in October, the live recording, which is going to be a lot more information and nuances to the system and strategy and setup, and a lot deeper of a dive of getting into growth journaling and progressing as a trader. So if you want to check that out, check out TRADEPRO and get that futures course. We'll be starting the live recording very soon. But with that being said, right, I think that many traders have the potential to succeed. There's just maybe 2 things that are stopping them. Naturally, it's pretty much impossible to be profitable without some kind of positive expectancy strategy, right? If you give a strategy no bias and you're trading it in and out consistently, it has to have some kind of positive expectancy. Step number 2 is the discipline, and you as a trader, your self-awareness and your ability to actually review, take everything that you do at face value without an ego, and create discipline throughout an extensive journaling process. Master those 2 things and you're going to grow and progress drastically as a trader and hit those goals and those targets. So with that, right, if this whole segment, this whole futures course helped you, drop a comment down below with one of the things that you've mainly learned and one of those new rules that you're going to implement, and check out community.tradeproacademy.com for a free open Discord. We have great discussions there with traders that are interested in our community and in our strategy, whatever it is, you want to go and check that out. Now, don't forget, we'll be dropping the recordings of the live futures course in the coming months, so go and get that. And we'll be dropping more educational videos here at TRADEPRO Academy. So I really appreciate you guys joining us on this journey. And down below, you can get a free PDF of a 7-day guide to help you get through some of those bad habits. And remember to check out our latest webinar. The link is down below. Thank you guys and take care.